Hello, this is Chris Levell from NEPC here to present with Jen Appel our post-election webinar. As you can imagine, there are still some races to be called, so this is certainly not going to be definitive, but I think in combination with our earlier sessions, this should give you a reasonable expectation of what we think is happening and what it can mean for the markets. So as I said, I'm Chris Levell, and I'm here with Jen Appel, and we're both on the asset allocation team. You may have seen our earlier session prior to the election, and I think most of the broad themes there remain the same, but there are really some specifics with the unusual parts of the election outcomes. So here are the key points that we'd like to lead you with today, and I expect this will be a shorter webinar just because we don't have definitive races, but things look relatively clear. We will have a good chance for questions at the end, so please do put your questions into the text box for the webinar. We think the key points here is the presidential race is not called yet, but could be called in the next few days. It's quite likely that Biden is going to be elected president. Has many more ways that can happen. So again, probably Biden is announced as the winner in the next few days. However, there are court challenges. There are the potential for recounts of ballots in various states, all with different state rules. So there's going to be some flux in that we think could lead to some volatility, as we discussed in the last call, similar to the election in 2000, where Florida became something that had all kinds of back and forth in the courts, and that lack of really a clear outcome made things drag on. Probably not, well, definitely not exactly the same fact pattern here, because we're talking about several states, as we'll talk about here, but likely a Biden victory there. The Senate, in contrast, is likely to remain majority Republican, and we'll get into some of the nuts and bolts of what we expect there. But their margin of controlling the Senate looks to be slimmer than the 54 votes that they had in the current Congress. And then the House is expected, and I think of all of these, this is expected the most strongly, that the House will remain Democratic. But also, again, with a smaller majority than in the last Congress. So this picture looks like a divided government, and we make the further point that there is a further divided government here in the party. So if the Senate only has 51 votes and they get one defection, then Vice President Kamala Harris could be the deciding vote on legislation. So presuming McConnell is Senate Majority Leader, he'll be having to have the factions in his party pretty tightly controlled, as will, again, assuming that Nancy Pelosi remains Speaker of the House, she'll have to secure a slimmer majority to advance things for the Democratic Party. We put this in here as a thought, but certainly not a likelihood, even just a possibility. Because of these slim majorities, there is some talk that the current Congress could actually meet before the end of the year and finalize stimulus that's been expected for many, many months and is needed in response to the pandemic. So that could happen just because there's going to be different factions involved in the next Congress, and it might be easier to get something through this year. We continue to reiterate, and this is a message you've heard from us each time we've talked about the election, we still think that the Federal Reserve is kind of in the driver's seat here, in the sense that as fiscal stimulus was not coming from the Congress in the last few months, the Fed has stepped in to provide liquidity, to help market sentiment. We expect that to continue happening. If there is fiscal stimulus, maybe the Fed is less involved as they have been the last few months. But in general, we think they're really key in providing market liquidity and functioning. And as I said, probably some volatility as there are some court challenges and some recounts. But our view is that the picture is relatively clear, but things can change. Certainly on election night, if you look at some of the betting markets, there were some wild swings. So betting markets were a decent market predictor, somewhat better than polls this year, but not something that was for the faint of heart because of the wide swings, just like an equity market when there's potential for changing volatility. So here's the presidential election as it stands right now. We're relying upon the AP results. And you can see, based upon the states that the AP has called, right now, Biden has 264 electoral votes with 6 needed to win. And you'll notice that Nevada there with 6 electoral votes is expected to go Democratic. We've used in the cases where a race has not been called around the country, at least what some of the numbers were in the last couple days. But any of these are still in play. We think definitely Alaska is going to be Republican. That's just because they're usually the last, given the time zone and remote nature of some of the balloting places. We expect that to go. And then the other 3 actually then don't matter. If Biden wins any of these states, then that is enough to win. As I mentioned, though, some very close races. Wisconsin and Michigan, colored solid blue here, as certified by the states and called by the AP, are things that were very close races, and races that Trump was winning at 3 a.m. The next morning after the election until more mail-in ballots came in. So expect some challenges. But the electoral math here is pretty difficult for Trump to not give up any states or even to flip one of the states that's been called. It's a daunting task. Next, we'd like to move on to the Senate, and this is important because one of the expectations going into this was that we might have a blue wave. And clearly, this is not a blue wave if the Senate remains in Republican control. Right now, again, based on the Associated Press, we're looking at 48 Republicans, 46 Democrats, and 2 independents that vote with the Democrats. So essentially 48 to 48. And we've highlighted actually 3 races here in 2 states. Again, Alaska is not finalized yet. We expect that to be Republican. I'll speak first to North Carolina. This was a very, very close race. Looking at current up-to-date markets, it's likely that it is Republican, but the margin is close enough that there might be some ballot checks. I believe right now the total though is 100,000 difference. So we would expect that to go Republican. But what the other state here that's interesting is Georgia. We had, I think, spoken a little bit about this in the last call. One of the Georgia Senate elections is a special election because of a senator that left office. In Georgia rules, the governor then appoints a successor, but then there's an open election at the next general election, which means that there were over 10 candidates on the ballot in Georgia, and the rules there say if no candidate wins more than 50% of the vote, and then there was a runoff. In fact, that happened with that many candidates. The winner here was a Democrat, but numbers 2 and 3 were Republicans. So there will be a special election for that Georgia seat. It'll be on January 5th. And again, it's expected to go Republican, but there will be fierce campaigning continuing on. So this election does not end even once the presidency is confirmed because of this special election and the fact that it could actually change Senate control. The other Georgia race was won by a Republican and fairly handily. However, for Senator Perdue, the incumbent who won by about 8%, he is looking right at 50%, and he faces that same rule for the runoff that's in the special election. So if he comes in just over 50%, then he is confirmed in the Senate. If he is 49.9 or anything less, then there will be a runoff between he and his Democratic challenger Ossoff. And then I think the only other person on the ballot this time was the Libertarian. They'd be dropped off, and so it would be a Republican versus Democratic race. So looks fairly even on this page, but both Georgia, even if their runoff elections are expected to go Republican, North Carolina is expected to go Republican, and Alaska is expected to go Republican. So we're probably looking at 51 or 52 Republicans, although things can change. And as I said, with the runoff, there will be plenty of continued expensive elections, as that becomes maybe a key turning ground. And then the U.S. House of Representatives, as we said, this is very likely Democrats winning this. In fact, I'd say of the Biden winning and the Democrats winning the House are two pretty strong projections here. But you can see that there were more gains in the Republicans, and if you look in that undecided vote at the top of this chart, that actually breaks down a little bit stronger Republican. So the way that I look at this is that the current U.S. House is about 54% Democrat, and it looks like the next House is going to be about 52% Democrat. So as we said, more working within the party, bringing forward agendas that can get approved. And with that, wanted to just check where I was in space. I'd like to next turn it over to Jen, just to go to a few slides on what this has done to the markets and what we expect will be expectations for the markets because of these elections.
Thanks. Given the results and the outstanding uncertainty that Chris just highlighted, the market reaction that we've seen over the past day or so has been pretty interesting to watch it unfold. As you recall, going into the election, markets were pricing in the likelihood of a Democratic sweep, with the expectation that this would be associated with higher taxes, but also massive fiscal stimulus spending to combat the disruption from the pandemic. But with the expectation now being for a divided government, the likelihood of that huge fiscal stimulus package is less, which in theory kind of negatively impacts investor sentiment. To be clear, we're still talking about a substantial fiscal stimulus package likely down the line, but the overall size and scope of that new package would likely be smaller than what we would have seen in that blue wave scenario. So with that context, why do we have a 2+% return on the S&P yesterday, and I think it's up another 2% today, given that there was a pretty large disappointment relative to what was priced in? Part of the rally can be attributed just to the fact that if we have a divided government, that is generally associated with more certainty, because it's less likely that we're going to get sweeping reforms going one way or another. So there's certainly a stability factor at play, which is why markets have historically kind of favored divided governments. Another piece of this is related to the tax component I mentioned. With the expectation now for a Biden presidency with that Republican Senate, the original Biden tax plan, it's probably not on the table anymore since it really wouldn't make it through the Senate. That's fairly positive from a sentiment standpoint and is definitely a tailwind for corporate earnings, thinking that those might have been impacted by higher corporate tax rates. And that was one of the reasons specifically we saw growth and technology equities outperform over the last couple days. We also saw quite a bit of movement in interest rates. Treasury yields across the board fell sharply over the last day or so. We actually saw the largest one-day decline in Treasury yields since March, with the 10-year even today hovering around 77 basis points. And given what I just mentioned about the likelihood of a more toned down version of stimulus, that negatively impacted market-based inflation expectations and even even expectations for bond supply down the line. So the long end of the curve, it saw that same decline in yields. Now, on the next slide, thinking from more of a policy perspective, the prospect of a divided government means that an expansive Biden agenda is unlikely, since this creates a fairly narrow band of executive and legislative outcomes that can be passed. So with that in mind, we tried to look back at everything the Biden campaign platform had said and identified areas and certain aspects where we think we're more and less likely to see them come into play during his potential first term, given the expected composition of the government. We think it's likely that the largest changes flow through from a regulatory standpoint. During Trump's time in office, something that we've highlighted is the fact that we've seen a lot fewer regulations than even during recent presidencies, given his pledge to reduce seemingly unnecessary red tape. So the president even signed an executive order stating for every new regulation, 2 would be rescinded. So with that, we would expect Biden to reverse a lot of the regulatory changes that we saw coming out of the Trump administration. One other interesting point here is with a Republican-controlled Senate, it's likely that we would see Biden enacting more of his agenda through executive actions. Those will allow the president to pass certain platform policies and priorities without going through Congress. So we anticipate that if he were to use that, we would see maybe some things on the environment or climate change and workers' rights, among many other things. So now moving to the middle of the spectrum on the slide, we've listed fiscal stimulus and trade policy. Now this may seem a little bit counterintuitive at first, but these are the 2 areas where the outcomes are more likely to be in line with the current status quo. So there's not really a material change here. For fiscal stimulus, I mentioned how expectations have shifted toward the downside relative to that blue wave scenario. But this was something that was really on the table whether we had a Trump or a Biden administration, though certainly the final package would look different depending on what party was in control. But the point being that this aspect has already been baked into market pricing to some extent. Then on the trade policy front, one point that Chris and I emphasized going into the election was that regardless of who won the presidency, a challenged relationship between the US and China would likely still exist because this has become more of a hot button issue on both sides of the political spectrum. Now, there's certainly some nuance with a Biden presidency. In general, the way we approach China may be a little less adversarial with more of a focus on a multilateral approach. But with that, we think there might be a little bit more predictability than if we had a second Trump term. And then finally, as it relates to Europe, a Biden presidency is likely a little bit more favorable for our economic relationship with that region as well. And now moving to the bottom of the spectrum, to the less likely area, we have things like taxes and healthcare reform that would frankly be really difficult to get through a Republican Senate. So from a tax standpoint, the low rates that were enacted during 2017 with the Tax Cuts and Jobs Act, or TCJA for short, are likely going to stay in place. But we are anticipating a higher tax regime over the next number of years as a lot of the provisions in that bill are set to expire. But that is a little bit of a different conversation than the really large tax changes that Biden was initially proposing. So looking forward, really, what does this all mean from an investment standpoint? On the following slide, we have just some basic takeaways that Chris kind of outlined at the beginning, but we've said this time and time again that election outcomes are very important, but we really do believe that the Federal Reserve is going to be the thing that's driving markets going forward. And that's an idea that's at the core of our key market themes with our permanent interventions themes, and it also comes through in our capital market assumptions as well. The point of this is that so much of what's baked into equity valuations and even interest rate and inflation expectations are based on the expectation that the Fed will continue to do whatever it takes and that they will continue to be accommodative and provide the market liquidity, really highlighting the reliance on the Fed put. And with the expectation now being for that more moderate stimulus package coming out of the divided government, we may even see the Fed having to step in and play a larger role and further expand monetary stimulus to fill the gap if the fiscal side can't. Now, that's certainly a possibility. I think there's an outstanding question of at what point does monetary policy become a little bit less effective when you have trillions of dollars that the Fed's working with. But I think that's a risk, and that tipping point remains to be determined. But regardless, that really continues to be the most important factor for markets and can continue to support investor sentiment. I also wanted to mention, just before we get to questions, Chris highlighted in the beginning a lot of the things that are changing. And it's funny, the timing of this webinar, it's on a day where we think there could be some outstanding results released. It's also during the Fed Open Market Committee announcement. So there is real-time data that could be changing some of the things that we said. So to the extent that we see some material changes coming through, certainly we'll follow up. But I think it is just really an interesting end to 2020. So with that, I think we'll open it up for questions. And like we said, feel free to submit any questions on the right-hand panel if you haven't done so already.
First question we received, and we'll hand to you, Jen. With the stock market doing so well, especially recently, how do you explain kind of the rationale for this, considering all the relative political uncertainty?
Yeah, so I walked through a couple of the reasons for the immediate changes that we've seen in the market over the past couple days, but we would really think this is based on the interest rate environment. One of the pieces we've highlighted is with rates being so low, the equity risk premium is historically attractive. So that's really, I think, the driving force behind the equity market valuation as you think about just fundamentally lower rates, discounting cash flows can justify higher multiples over the long run.
And one just follow-up way to look at this, going back to the slide that Jen presented, is that, going into the election, of the three, headline races here, the Democrats were clearly favored to control the House. That happened, so no changes there. Biden was expected to win the presidency. As we said, we think that's going to happen. So that's not a change. So the real difference here is, as Jen said, this idea going in that there could be a blue wave with the Democrats controlling the Senate. That's a very different environment than the Republicans. And you see it on this page with, unlikely change to the tax regime for corporations and individuals, unlikely to get major healthcare reform or other kind of sweeping legislation. One of the things that we looked at was, we often have periods of divided government, but this particular outcome that we're expecting of one party controlling the presidency and the House and another one controlling the Senate, that's actually pretty rare. The last time it happened was in George W. Bush's first term. And there was actually a lot of legislation passed in that first term, but it really came about, with the tragedy of 9/11. So things like the Patriot Act, the military force into Iraq, but even No Child Left Behind passed in that sort of mixture. You can pass legislation here, but not on the scale of a wave. If you're interested in the last time that there was a Democrat president and House and a Republican Senate, the trivia answer is it was Grover Cleveland's first term in 1885. So.
And another question that I think we'll send both your way as well, and maybe start with you, Jen. When we think about fiscal stimulus, either in 2020 or 2021, do you envision multiple rounds of stimulus or one large package?
I think something greater than one. And the reason I say that is I imagine that in the near term, we have the larger fiscal stimulus package that we've been talking about during this webinar. But I imagine that as the year continues, especially if the virus trajectory turns south, then that could mean that further stimulus might be required, especially maybe more targeted future stimulus down the line.
Yeah, I completely agree.
Great, thank you. And for Chris, maybe when we think about potential litigation around the election, should we see this continue for several months? Does that adjust NEPC's outlook in any way?
I think if there was protracted uncertainty, I think that would just lead to a greater period of volatility. As Jen presented, there are some dates that are key dates here. The one that's fundamental in the Constitution is the January 20th seating. So it's hard to imagine courts and recounts continuing to deal with this. On the last webinar, or 2 webinars ago, I guess, we spoke about what happened in 2000 with Florida. And that's the sort of scale we might be looking at, where in that case, the Electoral College vote in mid-December became key for resolving what was happening in Florida. I think we would see things on the same agenda. What's a little bit different here is that because of the pandemic, we've got a lot of changes in laws, a lot of changes in procedures, and a lot of mail-in ballots. So a lot of things are unprecedented, and so there might be some novel court challenges, things we haven't seen before.
And as a follow-up to the stimulus questions that have come in, and both of you feel free to weigh in, but Jen, maybe we start with you. What chance do you think we see infrastructure spending in the coming year?
I think it is truly 50-50. I know that was a big component of Biden's original proposals, but again, with where the Senate has been, I'm not sure that's going to be able to pass.
Yeah, I guess one way to think about this, combining just general fiscal stimulus, is that it's going to, whatever bill passes first is going to look quite a bit different than the HEROES Act, which is what passed the House this year. So, a package of getting this coalition of the marginal groups of Democratic House voters and the marginal groups of Republican senators could mean that there's some infrastructure thrown into a fiscal stimulus bill. But sort of an omnibus big infrastructure spending, yeah, I think that's kind of tough in this environment, because one of those marginal groups that's deciding here is more fiscally conservative senators that really have not actually had a good time in the Trump era, because Trump was more for spending than they were.
And another question for you, Chris, this time, thinking a little more broadly outside the U.S. China transitions and the relationship with China, with the U.S., it's been something we've discussed and written quite a bit about. How do you see the policy with China changing, if at all, with a potential Biden administration?
Yeah, I mean, that's interesting. Jen already went through the fact that the Democratic base, the voters in the Democratic Party, while they have a favorable view of China, that's become more negative over the years. And I think we have to acknowledge that some of that is actually with the pandemic starting in China and the disruption of global supply chains that we all saw. This certainly will not go down as being the toilet paper is off the shelves election, but people are rethinking things, especially when it comes to the healthcare industry and where they get all their supplies. And so while Biden has historically been pretty pro-China and China trade as vice president, I think that's going to be softened going forward. Certainly the dialogue is going to be, a calmer dialogue, let's say. And one of the things we haven't gotten into here, but an important part of a new presidency is exactly who is the cabinet. Who are the people making these decisions? Whoever the trade representative is from the U.S. Will have important implications to what happens with trade with China, with the rest of the Americas, and with Europe and the UK. So some of that will be, Biden's views. Some of that will be kind of consensus views of his party, and some will be driven by the people in those seats.
Great. Question for Jen. With a divided government looking, likely, how might we see corporate and personal income tax rates change in the coming years?
Yeah, so I got into this a little bit with the Tax Cuts and Jobs Act. So I mentioned that a lot of the provisions are going to be expiring over the next couple years. So from the personal income standpoint, I think 2025 is the big year where some of those will start to roll off. That said, some of the earlier roll-offs will impact the corporate side of things, though the corporate tax rate won't change. So there will be some changes really to how interest and depreciation can be deducted, which may result in some corresponding changes for certain companies as well.
And the other wild card here is that we have another general election before the next presidential election, and who knows, but campaigning is already starting, right? And if the Democrats flipped those, a few votes in the Senate, we would have that blue wave. Although, the history would show that, the midterms after a presidential election are usually go against the party of the president a bit. So maybe we'll see divided government with a Republican House and a Democratic Senate then. Who knows?
And last question to you, Chris, with the midterm elections, a little more than 730 days away. What are some considerations we should keep in mind, considering what we've seen transpire, with the results on Tuesday? Particularly thinking about state legislative control and 2020 being a census year.
Yeah, I mean, there is a lot going on, perhaps behind the scenes of this election, this very close election, and the fact that it is a census year is important. One of the other things that is important about this census year is we've seen, because of the pandemic, we've seen quite a bit of movement of people out of cities. Is that something that gets captured in the census? Maybe, maybe not. There will also be redistricting that will occur as a basis of that. And so which party controls each state will help determine what the new boundaries look of electoral districts. Now, I'll make a comment here that I think people will appreciate. Please don't think of gerrymandering and the things that happen with districts to be totally based upon who controls what party controls a state. In fact, if you look at it, it actually helps incumbents the most. So yes, the party that's that is in control will get advantageous districts, but then they have the stuff that's not advantageous, and those end up being great districts for the people they work more closely with across the aisle to secure their districts. It's politics is not something fun to always look at behind the curtain. One other thing that also makes me think about this is I think there's a reasonable chance that a President Biden could have senators come onto his cabinet. Obviously, Kamala Harris would be stepping down from California. That would be a governor's appointment, so it would be Dem. possibility of Senator Duckworth from Illinois becoming Secretary of Defense. That would be, once again, appointed by a Democratic governor. But an interesting one for me, working for a company based in Massachusetts, but not living in Massachusetts, is if Senator Warren is appointed to the cabinet, which I think is broadly expected because the governor in Massachusetts is a Republican. And in looking back at the history, generally a replacement for the Senate has been done by the governor, except when John Kerry stepped down. Mitt Romney, that was a Republican governor in Massachusetts at the time, and the House in Massachusetts changed the rules to take away that power from the governor. And then when Ted Kennedy passed away, the House returned the power to the governor because Deval Patrick was governor. So all I can expect out of Massachusetts is they will find a way to get a Democrat to replace Senator Warren if she is appointed to the cabinet. I don't know if that's a great note to end on. Just going on some of the crazy behind the scenes politics, but we hope you enjoyed this webinar. We hope it was informative. As we get final results, we will be preparing materials specific to the election and anything that might change slightly from the views you heard expressed today. We will be looking at all our views as of the end of the year and then presenting those in January. Which we are now doing really on a quarterly basis. And so, expect that from us about 15 days into each quarter for us to say what's happening with our global themes, what's happening with opportunities, and what's changing at the margins. With that, thank you very much. A lot of great participation with the questions, and we will close this webinar out. Thank you.